That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Investopedia editor-in-chief Caleb Silver, as well as Yahoo Finance's Ali Canal, joining us here to break down the moves today. Ali, let's start with you on that close.
Well, Josh, it didn't feel like a record-setting day, but in fact, it is. We see all the majors ending the day in the green after really waffling all in the red throughout the trading day. So the S&P, NASDAQ, Dow, all closing just above the flat line. That means we have 21 record closes for the NASDAQ composite. S&P 500 would be 18 record closes there. And it just comes at a time when we've been debating what the Fed will do in September, how we could see those rate cuts materialize, and really no change there when it comes to expectations from markets. They're still pricing in near 100% certainty that we will see that rate cut in September. When you take a look at bond yields, we did see the yields move up a bit. We are still below 4.3 for the 10-year, and the 30-year yield is still below 4.9%. Now, on a sector basis, you're going to see some interesting moves, probably more red than green here. Healthcare, which has really been a laggard so far this year, the worst performing sector, that is up today about 0.5%. We're seeing materials, consumer staples, industrials, utilities, a lot of these more defensive names closing in the red, financials also in the green here. And we've been talking a lot about market breadth. And yesterday we did see the Russell 2000 surge along with the S&P equal weighted index. And that's something that you do want to see. You don't want the gains to be concentrated in tech or those big magnificent seven players. You want to have that broad participation, which we are starting to see a little bit more of. So overall, another record-setting day, it appears, on Wall Street. Okay, well, it did look like we didn't get that record for the NASDAQ, closing just shy of that record close. But the S&P, we were able to get it done here, Josh.
All right, Ali. Caleb, your thoughts, my friend, on the latest moves. What do you make of it?
Yeah, those record highs, they come in bunches, and stocks sometimes just melt up even after bad news. We see a sell-off, and I think investors sometimes say, we can't let this opportunity go by. It's like smoke. It needs a place to go, and that's usually higher, and they chase it. So not surprising. The PPI print, I don't think, took anybody by surprise, even though it was a big number. We were all kind of expecting. I think we've been expecting much worse, and the results that we've been getting have not been as bad as we thought. So there's that. But you also have big moves by big stocks like Intel, which we'll get into in a minute. She mentioned the healthcare sector. That's Lilly powering that sector higher. The breadth is good. It's improving. It's been improving, and you want to see, as she said, good bench scoring across sectors of the market.
All right, breaking news to bring you right now. The Trump administration considering taking a stake in chipmaker Intel. This is according to Bloomberg News. That deal would help shore up Intel's planned factory hub in Ohio, according to the report. The company had once promised to turn that site, remember, into the world's largest chip-making facility. It's unclear the size of this potential stake the U.S. would have, but the plans seem to have stemmed from a meeting this week, remember, between President Trump and Intel's chief executive officer. The idea is for the U.S. government to pay for the stake. Details being sorted out. Caleb, headlines coming fast and furious. The stock reacting. We've got about 2% in the after hours. What do you make of it?
Yeah, well, things have really changed for Lipton, the CEO of Intel, because just a week and a half ago,
Trump was saying you're out of here. He wanted his ouster. He's calling for his head. Yeah.
So this is his administration getting very deep into the private sector, into some of the most important companies in the market doing some of the most important things. And the reality for Intel is they have the manufacturing base here more than any other chip maker in the U.S. to produce a lot of chips. And if we're going to become a chip producing nation, we're going to need Intel. We're going to need its foundry. We're going to need all of its factories all over the Southwest and everywhere else to make as many chips as possible. The fact that the U.S. might take a stake, that's an interesting conflict of interest, but everything is interesting these days with this administration.
The report's saying this is fluid. It sounds like we don't have a lot of details yet, so we'll see how this all flushes out and works out. It is interesting, though, Caleb, as a longtime market watcher that you are, when we talk about Intel, and here you have this storied American company, but on this show, listen, we talk about NVIDIA and AMD and Broadcom and Micron and you name it. Intel is not discussed all that. It is not in the bloodstream like it used to be.
Because it missed, arguably, the AI chip-making wave. It's catching up to it, but it missed the head start that NVIDIA was onto, that AMD was onto, that a lot of these other chip makers have invested in tens and hundreds of billions of dollars over the last few years, and they've been rewarded for it. So it missed that. It's losing a big customer in Apple, who's going to be making its own chips, and it lost its way arguably for a while. But it does have the infrastructure in place in this country to do a lot of chip manufacturing if it had the investment. So far, it doesn't have any big customers for its foundry business, which it invested a lot of money in. That was supposed to be the future. Maybe this, if it's true, turns things around a little bit. But we haven't mentioned Intel in a while. We hadn't mentioned Cisco in a while, and you had Cisco on the program earlier today. These are like partying like it's 1999 all over again.
It sounds like Intel's declining comment on the discussions. That sounds like the White House not immediately responding to requests for comment either, but we'll keep you posted on headlines as they come. Meanwhile, stocks falling most of the day, closing near the flat line after a hotter than expected inflation print. This fresh data possibly complicating the Fed's rate cut decision for September. My next guest certainly thinks so. Joining me now, got Liz Thomas, SoFi Head of Investment Strategy. Liz, great to see you. So we get that PPI print, Liz, this morning. You know, the market is betting on that cut next month, Liz. They expect it. Should the market be betting on that cut?
Well, the market is betting on it, and the market wants it very, very badly. And I think the bond market continues to try to send that signal. The debate before today had been whether or not the cut would be 25 or 50 basis points. Now I think we've taken 50 basis points off the table with this print. But I have to say, I'm surprised that the likelihood of a cut didn't come down further after today's PPI print. Now, part of it could be that PPI just isn't the headline maker that CPI or even PCE is, because it's not consumer based. But what you have to really pay attention to in this report is what happened, which was outside of expectations. So a lot of the belief has been that tariffs have been absorbed by companies. Businesses are just eating them and letting them go into their margins. That's not what this report showed. So now you have to sort of expect that if businesses aren't eating them on the wholesale side, maybe they are planning on passing them through to the consumer, and we just haven't seen that yet in the consumer inflation reports. That can take anywhere from 3 to 6 months, so we've still got some time and still some question marks.
Let me ask you this. What about those economists I hear who say, you know, listen, inflation, it is not where Jay Powell wants it. It's above target. But actually, their argument will be the Fed is now really focused on the labor market. That's what they're concentrating on. And that's why the cut is a lock next month. What do you say to that?
Well, we had 1 weak labor report. Now, it was mostly the weakness in it was about the revisions, not even the labor report itself. But I also would have to say we haven't seen a contracting labor report. Even with those downward revisions last month, nothing contracted. So we haven't been losing jobs. We're just adding them at a much slower pace than we thought we were. If we get another weak labor report in the August numbers, so we'll get that early September, then I think it is more likely that the Fed goes ahead with a 25 basis point cut. If we get a hot labor report, it complicates things a lot. So I think in this near-term scenario, when we're looking at between now and September 17th for the Fed meeting, the labor report matters a lot. Over the longer term, though, I take Jerome Powell at his word, and he has said multiple times, high inflation doesn't work for anybody. It doesn't work for businesses. Now I'm paraphrasing. It doesn't work for businesses. It doesn't work for the economy. It doesn't work for consumers. So I think over the long term, they are going to have to really look at inflation and the jobs market too. We're at 4.2% unemployment. There's room for that to move up before they're going to get really uncomfortable. So I wouldn't hold that as the only thing that they're going to be concerned with.
Liz, does the market need a cut to move higher?
This is controversial opinion. I don't think it needs a cut to move higher right now. I think the market really wants a cut. That's not to say that if expectations for a cut come down, yes, I do think we see volatility. But the market really has been driven lately by good, solid fundamentals. And yes, a lot of enthusiasm still over the AI theme and this technology supercycle. But I think that's warranted over the long term. Does it need a cut in order to keep having strong fundamentals from companies? Probably not. Does it need a cut to justify some of these high valuations? Perhaps. So I think that's the place that we're at right now. When the stock market is looking at the likelihood of a cut would help everybody feel perhaps a little bit better about these high valuations.
Liz, let me ask you, investors wondering, okay, given that backdrop, how do I want to be positioned in this market? What's your guidance, Liz?
Well, first of all, you have to believe in the future of American technology. So you still want to be invested in those names, no matter how many times we've pounded the table about it, and no matter how high they've gotten over the long term. This is a theme that proves to be one for reason for optimism and proves to still offer us growth opportunity. But something that I talked about in a blog that I wrote today is just needing that diversification, particularly at this juncture, because we've got a market, again, at all-time highs. We hit the 18th all-time high today. And we should note, too, of those 18 times this year, 15 of them have happened after the end of June. So it's been really clustered. It's happened a lot in just a short period of time. So you want the diversification away from some of the drivers that have been the strong parts of the market. That doesn't mean that you want to take a bunch of money out of those strong names, but I'm also assuming, because we hear so much about this cash on the sidelines, that people do have some dry powder to put to work. So you want to diversify it into some other drivers. Sectors that can be attractive right now, whether it's for valuation reasons or because they're just driven by other things besides growth and momentum. Sectors like healthcare, totally washed out. So attractive from a valuation perspective. Something like financials, driven by, yes, interest rate volatility, but there are other opportunities in financials that aren't so tied to that growth trade. And then you can also even look at energy. Inflation reports aren't necessarily going to send energy in one direction or another. So you can diversify away from some of that headline risk.
Liz, great to see you as always. Thank you.
Thank you.
Applied Materials third quarter results, they are just now crossing the wire. Shares, you can see, they're falling fast. Let's get you the numbers. Applied Materials, Q3, adjusted EPS, 248. That's versus a consensus of 236. So you got a bottom line beat. Let's look at the net sales, 7.3 billion. Street was at 7.21 billion. So that's a beat as well. Now, though, let's turn to the forecast. Q4 net sales. They're calling for between 6.2 and 7.2 billion. Consensus was at 7.32 billion. And that, Caleb, explains why we see the stock down a sharp 11% in the after hours.
Yeah, you miss in this market, your stock's going to get punished. We've seen the misses get punished a lot more than those that are exceeding guidance. And in this sector right now, in the chip sector, whether you're in Applied Materials or an AMD or an NVIDIA, you cannot miss your numbers and you can't guide lower because the investors are going to punish you for it.
A couple of questions I'd have on the call. One is, key question would be China, just the back and forth there with trade policy. I'm very curious how executives talk about that on the call, Caleb. And then in terms of demand, I want to hear just where the strength is. Is it the machines that are making, hey, the fancy high-end AI processors we talk so much about, or is it more auto, industrial? It'd be interesting to hear their talk on that as well.
Yeah, they're heavy in that part of the market versus the high-flying, high gross margin part of the market. That said, they are in the ecosystem right now, so demand is important. You also haven't heard their name mentioned in White House conversations, whether it's being able to do deals with China and give the U.S. a 15% kicker. They're just not involved in the conversation. Right now, it's about proximity to power for every company, basically, but especially for the chip makers, because chips are the currency of the 21st century.
By the way, while I have you, as we're talking chips, what did you make about the export tax for NVIDIA and AMD, 15%?
I think it's a very slippery slope to be able to do business.
Because you feel like, who's next there?
Who's next, but also we're doing business with somebody who we've considered a national security adversary, and allowing that chip making and that commerce to happen between borders, as long as the U.S. gets a little tariff on that, a little toll on that. I don't know if that's great practice. That said, that might be what it takes to be able to do business in the 21st century with this administration.
All right, I'm down 11% here. We'll see how the call shakes out. Coming up, it's day 2 of trading for a crypto exchange. Bullish. We'll check in on how that stock closed. That's coming up next. And Bitcoin sinking following a hotter than expected inflation print at the same time. The interest in digital assets, we know, not subsiding. Senior markets reporter Nez Ferre joining us now. Nez, catch us up on the latest.
Yeah, Josh, we did see the crypto market today roll over after that hotter than expected PPI print. But I do want to note bullish, which went public yesterday. We saw that stock today up 6%. It was up as much as 10% during the session on its second day of trading. Remember that this stock had opened at $70 a share. And in fact, also the IPO, they priced their IPO at $37 a share. So quite a move that we have seen. And look, this also highlights the sort of enthusiasm regarding anything to do with crypto, and especially because this is a crypto trading platform that is geared towards institutional clients, and anything really that has to do as well with institutional adoption, there's a lot of bullishness around that, because that's where the street is seeing a lot of runway, so to speak, because of more growth and adoption within that space. I do want to note what we saw today with Bitcoin, which was it was down more than 3% after hitting all-time highs last night above 123,500, and right now it's hovering just below 118,000 per token. We saw the same type of movement with Ether. Also, Ethereum was up near highs, and now it's down more than 3.5%. But look, make no mistake that these tokens have had quite the rally this year. They were expecting, or investors were expecting, looser monetary policy, so they were really kind of in lockstep with the markets as well. And you have also had regulatory tailwinds. I mean, you've had the Genius Act, you've had the Trump initiative for 401ks, you've had the SEC crypto project. So there's so many tailwinds regulatory-wise for this industry. I do want to point out what some observers were noting today, which were some comments that Treasury Secretary Scott Bessent said this morning during an interview with Fox Business, and he was talking about the Bitcoin reserve, and he was saying that the government won't be buying tokens for their reserve. They will be building up the reserve through confiscated assets. But he also said that they won't be selling any more Bitcoin. He said that right now, where the prices stand, that the Bitcoin that they hold is anywhere between 15,000 or 15 billion or $20 billion. Josh.
Thank you, Inez. Appreciate it.
Thank you.
Time now for what to watch. That would be Friday, August 15th. We're going to start off on geopolitics. It's been a busy week of inflation data, but now all eyes turning to Alaska for President Trump's summit with President Putin. It is the first face-to-face meeting between a U.S. president and Russian counterpart since President Biden met with Putin in June 2021. And the summit could have implications for the war in Ukraine as well as the oil markets. And moving over to the economy, U.S. retail sales data for July, that is coming out on Friday. Economists forecasting total retail sales to hold steady at 0.6%, while core retail sales slow to 0.3% on a month-over-month basis. The new data signaling that consumers are still spending overall, but underlying spending momentum is softening. And speaking of the consumer, we're going to be getting consumer sentiment data for August on Friday. That number expected to tick up slightly to 62, giving us more insight into the health of the consumer and signaling that they're feeling slightly more optimistic about the economy. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market news stories so you can get ahead of the themes affecting your money. Stay tuned.